Welcome to Echo Trade. This is Jeff Roth. I'm here with Gerry Sparrow from Sparrow Capital. Gerry's the president and head portfolio manager of Sparrow Capital. He's coming to us from St. Louis, and Gerry's got 30 plus years of investment and management experience. Gerry's been quoted and a guest on Wall Street Journal, CNN Money, Forbes, Bloomberg. The list goes on. And we are here to talk about his portfolio within Echo Trade, current events, the news, and kind of see what the thought process is behind the portfolio and if it's a fit for us. So, Gerry, thanks for being here. Appreciate you taking a few minutes.
Thanks, Jeff. Good to be here.
Yeah. So let's dive right into the portfolio. What are you trying to accomplish with this strategy? And what's kind of the overarching thesis? What is the goal? Is it pure growth? Are you trying to generate income? Kind of dive into what the kind of overarching broad thesis is.
I think that the overall strategy, current events, the news, is to stay in front of the changes that are occurring globally, locally, individually. So the reason why we do that is because we think that that's where you have the best chance of making money. So, for example, when the internet came along, the beneficiaries were hard to sort out, but eventually it ended up being the technology sector and also some retailers. So we keep an eye on the news. We keep an eye on current events. We want to know where consumers are spending their money, how they're spending it, where they're spending it. Governments, we want to know what governments, how they're spending their money, and businesses. So we stay ahead of that information. And then we drop down into the individual sectors and the companies who would benefit from those changes that are going on in the world, and invest in those areas that we think have the best odds of making capital gains. So the strategy is to keep an eye on recent developments going around the globe, and then buying the businesses that we think will make the most money in.
Gotcha. So you're purely topical. And again, that's going to change from one year to the next, one decade to the next, but you're just looking at what today, like for instance, I don't know if you have any AI in the portfolio, but obviously that's a big thing happening right now. And so whether or not that's within your portfolio or not, but that's kind of the overarching thesis, I guess, like you said, of the portfolio is you're staying topical and you're not limited on sector or market cap. You're just looking specifically on what topically is going to generate the most growth for the portfolio.
Right. Like, for example, since I've been investing in 1988, I've seen a lot of changes. I mean, I remember when AOL went public.
Yeah.
And that was years ago, obviously. But some things are slower and some things are quicker. For example, slow downward to get the opposite of what we're talking about is the newspaper business.
Mm-hmm.
So I remember getting tons of newspapers, reading them all the time. I still get newspapers, I read them, but the amount of subscriptions obviously have gone almost it's irrelevant now. So like the New York Times, or you can get that online. So if you're selling trees, right, to the newspaper business, they're not going to be cutting as many trees down and putting the print on paper and then putting it on a truck and sending it to your house. I mean, you can get the news right online. So, beneficiaries of that change would be companies in the technology sector for the advertising, of course. A lot of online websites make their money through advertising. So those are the beneficiaries where that advertising dollar has moved online versus offline.
Yeah, got it. So yeah, I mean, you're basically, again, the goal is growth, and you're just looking at topically what companies are going to be
correct. Yeah,
sector.
We want to be in the winners. We want to be in the leaders.
Yeah, gotcha. And then so with that, I mean, how would you kind of define the risk profile of the portfolio? Are you guys, high risk, low risk, medium, kind of somewhere in the middle? And then what are you guys doing to actually kind of manage or mitigate that risk?
The risk, there are a number of risks in the portfolio, of course. One risk is a change in interest rates. So you've got this discounting factor. These businesses are valued at certain multiples, PE ratios.
Yep.
As interest rates increase, which they have recently, the increase started, I guess, a couple years ago when the Fed started raising interest rates. What knocked down a lot of the price earnings ratio. So right now, the 30-year bond is close to 4%. If you take the reciprocal of that number, that's 25 times earnings, right? So companies that you invest in, you want to make sure that the valuations are good relative to the alternative choices. So that's one risk is changes of interest rates. That affects all stocks at the same time. The other risk is paying too much for a stock. So you want to use certain multiples of cash flow and discount those cash flows to make sure you're not paying too much for a stock. And then when you get in a portfolio of, let's say, a group of stocks, then you want to, I would say for our portfolio, we think a minimum of 5 stocks, 3, 4, 5 stocks. We don't put all our eggs in one basket. We diversify the portfolio. So there's risks in the equity markets. You're going to get that with the portfolio. There's risks with interest rate changes. You're going to get that type of risk. But we think that the reward of investing in these types of businesses is good, and your returns may exceed substantially those risks.
Yeah, I mean, right now you guys are outperforming. I think over the last 6 to 12 months, at least a 6 months, I think, period, you're outperforming, and so it's the portfolio is doing fantastic. And so you bring up a risk being changed in interest rates, and obviously we've seen more interest rate change than we have in the last 10, 15 years in the last year. So how has that affected it? So has that negatively affected the portfolio, because it seems to be outperforming pretty darn well as of today?
Mm-hmm. I think that you go through certain periods of time where there's a lot of emotion in the market, a lot of ups and downs, so to speak. But if the businesses do well over time, we should be okay. Now, the other thing I want to mention is that I personally invest in all these companies.
Okay, so specifically then in terms of risk, so what are we doing actually to manage and mitigate that risk?
Well, the first thing is diversification. So when we build a portfolio, we add more than one investment. So the portfolio typically has 3 to 5 investments in it. And within those investments, all the businesses that we invest in have earnings and cash flow. So they're not startups. They've been around the block. They've got seasoned management, and they have earnings. So the reason why that's important is because you don't want a company that doesn't have earnings, because they're going to be looking for more capital. Either they're going to be issuing debt or equity. So that we think that's a risk to be diluted out. So we can eliminate that risk by buying companies that are seasoned, that have earnings. So you get multiple stocks, multiple earnings. The only risk that we really can't mitigate is stock market risk. So if interest rates increase like they did 24 months ago or 18 months ago, it knocks down the valuations of stocks, because stocks are discounted cash flow vehicles that you expect to get over the lifetime of the business. So when you increase interest rates, the valuations drop. For investors that have in my opinion, 3 to 5, 10-year investment horizon that want to be in equities, we think this is a great strategy. It's a diversified strategy, and we're in businesses that we think have a bright future.
This is, the portfolio that they're looking at within EchoTrade. That's your own capital that you've invested, and it's a smaller portfolio because you built that specifically for EchoTrade and that specific account. But you have your larger amount of your own net worth and your own capital in this type of portfolio. Is that right?
Correct. I have all of my capital in this type of portfolio.
So obviously with EchoTrade, we're trying to cater to a different client base that traditionally you would have been working with. So what's your kind of existing, client base that you're actually managing their capital look like prior to, kind of participating with EchoTrade?
Well, the demographics of the client base is you can rank it by large to small, also by types of accounts, whether they're taxable or not taxable. So we do have a broad client base in terms of institutional investors, retirement plans, insurance companies, et cetera. And we also have a lot of individual high net worth clients. And then we have folks that are starter savers. So the type of client is very broad, in some cases very large investors, and others small investors. So everyone has to start somewhere.
Yeah.
Investing. And we want to make all investors good savers, good investors. And the only way to do that is to educate people. So the larger investors typically have more seasoned people, overseeing their investments. But there are a lot of folks that are starter savers or younger. And they want to build capital over time. And we want to support that group because that's our future.
Yeah. So, I mean, your institutional investors, I mean, what's kind of the typical account size that you're working with those clients?
Well, those are multi-million-dollar customers. So they could be the types, like I said, the types of investors could be corporate investors or different industries like healthcare.
Yeah.
One sector they're very good at savers and investors. Industry, for example, insurance companies, but also a lot of retailers, manufacturers, all different sectors of the economy. People are saving, especially in a good environment like the United States. So that we have a broad range of types of accounts: trust accounts, IRA accounts, taxable accounts, a lot of retirement savers in the portfolio.
Got it. No, I think that's great, because I think you're managing, if I'm somewhere around 200 million in capital right now, right?
Correct, and it's split up between fixed income and equities.
Yeah. So no, I think it's great that, I mean, you're managing institutional capital guys with, 5, 10, $15 million accounts. And now suddenly, within EchoTrade, we can get access to your expertise. I think it's really cool. So kind of diving back into the portfolio, why this strategy specifically? Because you're operating, if I'm not mistaken, a few different types of portfolios. Like you said, some fixed income for your other clients. Why'd you choose this strategy specifically for EchoTrade? Why'd you build this portfolio? A lot of different, kind of philosophies you could have kind of chosen from. So why did you choose this one specifically for EchoTrade?
Well, the philosophy is the philosophy that we use everywhere. So yeah. If we're looking for, we're not buying penny stocks. We're not buying new startup companies that don't have free cash flow. We eliminate a lot of the things that we feel are too risky. Yeah. And we do that for everybody. So if you're an institutional investor and we like companies in the pharmaceutical space, we're not going to buy an IPO where they're going to be raising a lot of capital, issuing a lot of stock. We're going to buy businesses that have been successful over time. We'll put that in the institutional portfolio, but we'll also put it in my portfolio and in the EchoTrade portfolio, which is the same, by the way, right?
Yeah.
It's my capital on the site. So everyone is going to get the same investments across the board for all of our investors.
What kind of screening process do you go through before you put a company within the portfolio? I mean, are you kind of looking from top down, where you're looking, like you mentioned, on a certain sector, and then within that sector, what companies you want to add to the portfolio? Or is it, you see a specific company that attracts your eye, and then you're kind of taking a look at that? What's the kind of investment process to choose a company?
Well, there's art and there's science part to it. So the art is reading, listening, talking, spending time with my kids. Where are they going, right? Where are they
Yeah.
shopping?
Uh-huh.
They're pretty good picks if you know that they're going to what makeup stores they're buying makeup from, correct?
Yeah.
Yeah, so you can get clues everywhere, and then once you assemble that type of information, then you go to the science part. You want to know, since everyone is that you pretty much know what you're looking for, and then you just go to the different websites that the place that shows all the stocks. I don't want to give any names right now, but we have sites that we use that shows all the stocks, from technology to utilities to consumer staples, consumer cyclical. We consider all companies when we're doing this, and we look for the companies that are that are doing well in terms of growing their businesses, and then we will read a lot of the information that the company puts out. So, for example, if the home builders, which are releasing earnings today, they're talking about good business environment. So if you're in the home building sector and you're seeing a lot of demand for new homes, existing home sales actually ticked up today. So keep an eye on the economy and what consumers are doing. And then we'll look for businesses that could benefit from that trend.
Yeah.
Market. Yeah. So that's kind of what we do. And then on the science part of it, it would be a valuation metric. For example, comparing the free cash flow of a business over time relative to what other choices we have as investors. And so we'll use the 30-year treasury bond, which is now about 4%, to compare valuations with the opportunities in the equity markets relative to fixed income.
Got it. And so, I mean, within each name, or is there a target that you have, or a time horizon that you're looking to hold each company that you put in the portfolio?
We really don't have a time horizon. The best stock is the one you never have to sell, because you never have to pay any capital gains.
Yeah.
So we don't really put a time horizon on it. What we would do is we would, if there's changes going on in the industry or the business, and it's not favorable to that company, whether it be lawsuits or technological change, then we would make that change for our investors, because we think that the opportunity is too great to stay where you are.
So, I mean, within that also, like you said, you're it's a relatively concentrated portfolio, if I'm remembering correctly.
Yes.
So are you then, is each name kind of representing a certain sector, or how does that work?
Each name represents a particular theme.
Gotcha.
So, for example, a lot of new business is especially during COVID, it migrated from in-store brick and mortar to online.
Yeah.
And there's a lot of beneficiaries of that change. So you could look at financial service companies that are benefiting from more transactions online. And you could also look at consumer habits. For example, the cards that people buy, right? You go to the store and you get the Apple Card or the Visa card, that types of things. So those transactions are moving from offline to online, and that trend continues to today. So it did accelerate during COVID, slowed down a little bit because people wanted to get out, right? And now people are traveling more. So the beneficiaries would be the airline industry, the hotel business. So just keep an eye on those. And those trends, we think, will continue for a while.
Well, Gerry, I mean, the proof's in the pudding. The portfolio is doing fantastic as of today, and I know when we first started talking, you came highly recommended with some glowing words from some colleagues and some people that have worked with you in the past. So I'm excited to have you a partner on the platform. Thanks for taking a few minutes. And yeah, if anybody wants, they can take a look at the market, current events, and the news portfolio within EchoTrade. Thanks, Gerry.
Thanks, Jeff.